there, welcome on in. This is Lowcountry Money Talk. This is our opportunity to check in with expert Phil Bloyd. And boy, we're glad to do that with Revolutionary Financial Group. Lots of expertise in that brain.
Yeah,
nice to see you.
We'll try. Good to see you, Jessa.
Well, as always, we have a lot to get to for our viewers. And those of you who are viewing us today who are in retirement or nearing retirement, you know better than anybody that there are some challenges that we are facing right now.
Absolutely.
So what I'm hoping to get from you right now, Phil, is just, what specific challenges are we seeing? Obviously, there's market volatility, inflation, and how can we make it simple for folks to manage that right now?
Well, Jessa, the inflation continues on. That if we're not planning properly, it can destroy our retirement. I would also look at cost of living, because even, inflation may be 8.3% or so. Buying food and other things is way more than that. So then we have the cost of living. We need to plan for that. We need to arrange our distributions if we're over 72. That we don't have to sell a part of our portfolio, which may be in equities. We don't want to do that. We've been through a couple more bear traps. So we spoke on the show before about bear traps. So that's where the market rises or falls due to, erroneous information.
Right.
So we've had a couple of those. The market likes to think that the Federal Reserve is going to back off of their statement that they want the Fed interest rates to be at 4.5 to 4.6 by the end of the year, where we're at 3 to 3.25 now.
Okay.
So I would not bet on the Fed changing that policy at this time. But the market's reacting to that, thinking, well, if the economic numbers come out, worse or this or that, maybe the Federal Reserve will back off on those interest rate hikes. I wouldn't plan on that. Okay. But we've had a few rallies because of it.
Well, and it's interesting because a lot of times, we talk about things on this show. Well, you talk, I listen, and then we see it actually happening, very shortly after. Here's a great example where we discussed that, and now here it comes to fruition. So interesting stuff.
Right.
What else is going on? How can we really take a look at managing this process, managing some of this tricky things that we're seeing?
Sure. We always talk about if we put a plan together, it'll relieve stress. I'm still amazed on how many people I've seen that come in and they still don't have a plan. And they may be several years into retirement, and because the stock market had been doing so well over the last 13 years until recently, people became very complacent, and they're just
on autopilot, right?
Yeah, it'll be fine. It's all good. And then, when we start having some bumps and some waves, and the market is gonna go down periodically. We talk about that. At least, in a 10-year span, you're gonna have a pretty decent bear market, and people seem to, wait to plan until we're already in that situation. So if we get ahead of it a little bit, I think that would be the idea.
Well, and that's just such a good lesson, because you need a plan when things are bad, but you also need a plan when things are good, so that you can make those adjustments. I've seen you do that, and how you really are able to make plans for a bad market, and make plans for a good market. You got to plan for the bear, plan for the bull. Right. There's a lot of things going on online, and I know some of our viewers can relate to this, where there's all these different ideas for retirement and things you can do, but a lot of times the online things are confusing and maybe even can be a little bit misleading.
Right.
So when we come back from break, because we're going to go to break here in a minute, we're going to talk a little bit. Hopefully I can answer some questions. You can answer some questions about how to organize your retirement, make sense of some of that stuff we're seeing online.
Keep it simple. Everybody's going to be a little different, but we can lay the framework, and inside the framework we can have things that are laid out a little bit differently for an individual based upon their income needs and things of that nature. So it doesn't have to be complex, and it shouldn't be complex. Okay,
so you need a plan, but we're going to organize, we're going to keep it simple, simplify your retirement. We're going to learn more about that when we come back from break on Lowcountry Money Talk.